I just finished up. There's a conference down here, three healthcare conferences down here in South Beach for this last week. It started out as a Barclays conference years ago. They held it for, I don't know, 20 years, 40 years, whatever. And now that Florida is so popular with the financial crowd, and pretty much with everyone at this at this point, who anyone who's interested in lower taxes and better weather, um, the Leerink and I want to say Mizuho, and Wainwright. So there are four conferences all at the same week. They kind of play off each other. Since you're down here, you might as well come to our conference. A little bit difficult because of traffic and stuff, but if you want to see a healthcare outside JP Morgan in San Francisco for the Jefferies London conference, this is now the third strong contender. And I had 20 something one-on-ones, so it was busy. I'm going to just hit a couple highlights over the next couple weeks. I'll go through more. It's like reading a great book. You have to sit for a while and kind of cogitate on whether or not, what did this mean, then do the work that the questions came up in the Q&A and during the discussions. I will tell you the best, the company that I didn't really know that was the one I'm going to do a lot more work on, and I like a lot, is 4D Therapeutics. It's the small biotech company. They're working on, there's a drug for retinal disease called Eylea. People who have age-related macular degeneration have to get injections into the back of their eye on a periodic basis. For some, it depends on how quickly it degrades, but every few months. So these are older patients generally, and they often need a loved one to bring them to and from the doctor's office because they have no other way to get there. You can't drive yourself the day you're getting this done. You can drive yourself there, but you can't get back. So there's a number of things that makes a longer duration of therapy really valuable. It also clears out the doctor's offices so that they can see more patients, right? If you don't have to go as often. The problem with that is that doctors get paid every time you visit. So there's a little built hesitancy for something that would last. What they're working on is a gene therapy that's localized gene therapy that would be like a one and done type therapy. So it's really impressive. The data so far has been very good. The work I want to do is to figure out whether doctors really will embrace possibly losing some money in the short term of not seeing these patients as often, but seeing a much higher drug price. So doctors get paid based on the price of the drug as well. So a kicker, a percentage of the drug price. And so if this is going to last forever, you could probably price it at 3 years or 4 years of therapy. So it's an advance. What I like is that it's definitely a game changer for these patients. So a lot of people are working on tweaks to things or how to make more money. This is a really, really interesting one. If the data that comes out mid-year this year doesn't look so great, then it's pretty binary. They have other things in development, but if this drug fails, you're in trouble because they're losing money. So I'm going to size it to the point that you go, okay, this is where this could be a 10 bagger if it works. If it doesn't, it's a zero or something close to a zero. For a more familiar name, Teva, which I've talked about a lot, I had talked about it last week or a couple weeks ago and said, stock's up there. I sold some. I'm happy to ride it out because it's really executing well. Um, I'd say I was mixed on the meeting. I mean, it was a group. This one was a group meeting, which was helpful. The Blackstone deal came up. To remind people, they did a deal to offload some of the expenses for this year and next year to Blackstone in a royalty deal for a product that is already partnered with Sanofi. So they were asked about whether or not it was just to manage the P&L. And after a lot of back and forth with a number of people, they finally said, look, we gave commitments to investors when we were near bankruptcy that we were going to move this company forward and we're going to have relatively stable earnings growth and we're going to control costs. This is part of that. I think that's a fine answer. I don't like off balance sheet financing or things like that. But I think that was should have been the answer to lead with, like, "Hey, we're doing this because it helps us achieve what we want." Um, so as the stock's gone up, sometimes I see companies get too comfortable. Um, I didn't get the sense they're too comfortable, but I would say that it was not. I didn't walk away going, "This is great," but I do like that they're executing. So I'm going to digest that for a bit. Having already sold some, I really don't see a reason to change. I think that it gets down to the low 20s, um, maybe even the mid 20s. I'd be interested in buying back that little slug that I sold at the mid 30s. So um, let's see. Look up the chart at Amphastar. You could, if, and Kevin, if you have anything to say about the chart of Teva, please jump in.
Teva is this is the way you want corrections to happen. It's orderly. There's no dramatic spikes. The volume doesn't you don't it doesn't look like you've had big long term sellers that really want to get out yesterday. So I kind of wish it held this 30 level better than it has, but I don't think it's the kind of correction you want to see, especially if you have positive catalysts in your pocket, which it sounds like you do.
Okay, good. So met with Amphastar, which is a company that I really like the management team. I talked about a couple weeks ago as they put out their earnings, and they added in some early stage development products, and I said, "Oh, the market's not going to like that." And they also missed earnings and had lower than consensus guidance for this year. So they kind of hit it on all. They were filling up their bingo card of things not to do, and the stock, if you take a look at that AMPH, it's reflected that there was nothing in the meeting that told me that there's a fast turnaround or they're changing course or anything like that. So a friend of mine asked, "Well, when are you going to step in, really?" And I said, "Well, this is as much as I like the company, I like that they do generics that are hard to do, and I like the management team. The falling knife." Phrase that people use of in the markets of try to catch a falling knife, this is it feels that way. It just so I'm not going to be a hero. I don't know, Kevin, if you pulled AMPH up, what you think.
Yeah,
He's putting on the
the fact that the news was so bad on the earnings call that it took out this 28 level, on that day with a gap down on monstrous volume. I mean, that's the epitome of a falling knife, and it looks like it wants to be on the floor, but unless you've got positive, I keep saying this, unless there's positive catalysts coming up soon, and it sounds like you're at least three, the earnings report is 3 months away, and I don't get the sense that you see anything positive happening then. I think you got to at least come back to above this 28 level, the breakdown point, and try and fill this gap, and I got to see some volume picking up on the upside. And right now, it's all negative. So I wouldn't. I don't. Nothing to see here, folks. In my opinion.
all right, and I'll jump on two others. So there's a I'll try to be brief. There are these two companies that I own, Syndax and Cura. Syndax is SNDX and Cura is KURA. And they're competitors. They have some overlap, and most overlap in the most significant areas. So I met with them back to back, and um, I asked. You always ask companies about their competitors. So Syndax, I asked them about Cura, and they said, "Well, we actually don't care." Um, they launched it around the same time in the same category, and Syndax is, I don't know, 5 times the sales, something like that, maybe higher. And so Syndex's line was, "Yeah, they're in our rearview mirror. We don't care." Well, I don't disagree that Syndex has a lot going for them, and it's up 85% since I bought it, so I'm happy. But if anyone's seen Rocky or any boxing movie, or you can come up with whatever similar analogy, is that don't count out an angry, beaten down competitor. And Kira, the meeting was good. I think management's interested in buying stock. I think that which I'd like to see. is a successful entrepreneur previously, and I think they're building a case that they're going to be a slow build, and that they have data coming next year that will ramp it up even more. But maybe there's no reason to rush into. Syndax is just executing really well, so I'm happy owning that. I'm happy to stay with it. Maybe there's not a reason to rush into Cura, but I do like these kind of beaten down, forgotten names.